To look at support and resistance on a market. So we're on Australian dollar, US dollar. We've got the chart loaded on the daily time frame, and we're just going to start bringing it all together and looking at the potential levels. So we're not going to use the round numbers because, as I've mentioned, they are mainly a guide, sort of guiding you toward potential levels to watch if you're learning and you find it very difficult to just pick out the swings. What we are going to do is we're going to use the triangles. And we're going to look at recent price action, these recent price action levels. So we'll just start from here. We're coming up, we're testing. What I would say is, rather than this being a triangle, the main focus here is this flat section of price action. Relatively minor triangle, but it's very easy to see, so it's worthwhile having. This area here also would be a flat section, but we can mark it in as a triangle so we know where we're watching. Back up again, strong swing. And we're not really overthinking this. When you're plotting these triangles, as I've mentioned, it's just as you're getting started. When you are, or when you've been doing it for any length of time, you won't really need to draw these in. This is how I started. By drawing these, I would just follow the market. But then as I moved on, you can just sort of see them. You just look and you can see there's a triangle there, you can see there's a triangle. But this is a good way to get you started. We're just marking them all in, say down to here. You could potentially say you've got one here, but really it's all just one sort of big triangle bounce, flat section of price action, and then we come all the way down and we get 1, 2 and 3. Let's just draw them in. Now what you're also doing when you're looking at this market is, you'll cover this a little bit more in the sort of trend section that we're looking at, but you're just looking at the market and you're generally thinking, how has this market been moving? And it's pretty obvious, it's been falling. Yeah, it's in a downtrend. With the market also, what we can say is we've came down here, we've bounced a few times. This really looks like a little bit of a holding pattern, potentially a small head and shoulders, potentially for a bullish bounce. We've got nice key levels up here for potentially retesting. When you're plotting your support and resistance, that's the sort of things that I'm looking at. I'm just sort of letting my mind wander over the market as I'm plotting them, because every market is going to be slightly different. And if you're looking to identify trends alongside the support and resistance, when you're drawing these in, it's a good time to start doing it. I'm not paying too much attention as yet. What I would then do is, after I had the levels in, I just sort of come back and look at the market swings and start to decide, is this market looking bullish? Is it looking bearish? Do I want to trade with the trend? Do I want to trade against the trend, etc.? So now that we have our triangles, we're basically looking at any of the areas that we have marked up where we have the points. That's your guide. It's telling you the areas to focus in on. And if we just sort of delete, in fact, what I'll do is, because we already know where they are, we've already marked them in, we'll just mark these ones down here because they get a little bit more jumbled. I will then delete the lines. Okay, down here we can see them very easily. 1, 2, 3, 4, 5. So we just go into object list. I'm just going to delete all of the trend lines. Okay, and we know where we're now going to be focusing on. So what are we doing? Looking at this level of price action, what can we see straight away? One of the things I would say is, if you've got your horizontal line, you can literally just drag this up until you find the level that it fits. And very often what will happen is it'll almost look like a jigsaw piece, just slotting into the market. You can see the market holding exactly at that level, or not exactly, but very well at that level. Yeah, it's a good level for your support and resistance. We then just get the next one and we just sort of scroll it up and we start to look and we start to think, okay, where it makes sense. I'd really say sitting around about here. You can take into account the little spike up, but really what I'm looking at is to the left at these levels, right here. It's holding nice and flat before we then get the break up. And if you come to the right, okay, we can see the market testing the level, pressing higher, coming down, holding the level, holding the level, holding the level, and then pressing higher. But as the market starts to form this price action, potentially you then start to think, okay, I really want to adjust this down. And with support and resistance, I'll look to replot once every month. Usually I do it at the end of the month. If you're going to be trading sort of lower than the daily time frame, lower than the H4, then yeah, you want to start doing your support and resistance monthly. You don't have to do the whole lot. You just do the areas where the market has been trading, and you have a look and you say, okay, do my levels still make sense? And that also helps you see what the market has been doing. and make sure you're aligning yourself with the dominant market forces. If you're trading higher, if you're just taking entries off the daily time frame and you're plotting on the weekly and the monthly, you don't need to do it every month. You can do it, every quarter, almost every 6 months sometimes, because the markets don't always make big enough movements for you to have to adjust things. Okay, so then we come up and we see this section here. We say, okay, we've got a little swing point right here. I'm just dragging it down, and where does it start to fit in? Down here. Close, the open, the spike down on this candle. Holding at these two here, yeah, it's a potential level of support and resistance. Market starts to come up, we get this whole flat section right here. What I would say is potentially this is actually going to be 2. So we want to take into account the spike down, first of all. It's a fairly significant spike. And if you come to the left, you can see the market holding at these levels. Yeah, it looks actually pretty good where it's sitting. Then we'll just take the level and we'll just have to scroll up. And we'll say where it starts to make sense. Yeah, potentially all the way up into this spike down here. Because then we're incorporating 1, 2 spikes, all of this price action. As the market starts to come up, we find support here and we press higher. Now on the underside, there's potentially another level sitting here. The market close, the spike down. Where are we going to try and align it with? Well, we've got these spikes down, but really what I'm looking at is this whole section here. This is what I mean by it sort of fits. You've got the close in the market here, the doji candle here, the open and the close. So a doji candle is just a candle of indecision, the open of this candle right here. Before we spike up, we're coming down, we're holding at the level, and then we spike up again. Market comes down, comes up, retest at the level. So that's really starting to incorporate this triangle here. What we could say is we'll bring it down ever so slightly to take into account this spike, and that's our level of potential resistance. Now, if we then start to move on to our next triangle, so we've got one here, obviously, so around about here. So we're taking into account all of this price action. We're also taking into account the spike up of this candle here, and where the market held sitting right here. Upper band would be, I'd say, around about here. In fact, we can take it into the high. Containing all that price action, the market sells off. Down below, we can see a rectangle, and we've got this flat section of price action. So really this is all going to line up into some sort of a level. And where's the clue as to where it should be sitting? 1, 2, 3 spikes down, very, very similar levels. If we include that, it's going to incorporate 1, 2, 3. We then get our next level, and we say, okay, where it makes sense? I'd say around about here. The market's trying to spike down. It's trying to break out of potentially a support level, but it's failing each time. What is it pushing back up into and closing into? This level right here. That's your clue when you're plotting this. So when you're plotting this price action like this, this is giving you the clue. You're just looking at it and thinking, what is this market doing? And this is what I mean by it's not always just the lowest points. Because a lot of people will just look at this and they may have just plotted from here all the way down. The zone's way too big. It's 2 completely different zones. And then for the one down below, yeah, sure. If you want to incorporate those, you can. Into a separate level, like this. Got the spikes here. So we're starting to look pretty good. Then we're coming down and we're looking at 1, 2, and 3. So really what I would say is, let's start with the bottoms. It's fairly simple. There's potentially actually a few levels down here. So let's just make sure we get this right. I'd say up into here. We're incorporating both of these spikes down. Spike down here also. And then if we take the lows of these candles, I'll actually bring it down ever so slightly to incorporate the 2 candles here. Then we've got this price action where we press higher. We come down, we're trying to break down, we're testing at this level where the bear's stepping again. Then we break up, then we come down, we hold at the level and we press off. So the market is basically, it's like it's telling you a story. It's telling you exactly what's been happening with the buyers and the sellers. 1 and potentially all the way down. What I'm going to do is go to the left to see if we have any further evidence. I would say really, I'd want to keep this zone like this, just taking into account this spike. Though we have a pretty strong spike down here, I would rather have this as 2 separate zones. Because really, this price action here, we've then opened above, held at level and pressed up. For me, this is spiking down into something else. Just looking for any sort of evidence as to support and resistance levels. Potentially, you'd have one sitting at all these spikes. So spike, 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 and spike down. Ever so slightly up. You've got your level. And then you can start working your way even further down. So we go all the way back. Okay, yeah, so that's pretty good with the spike down. We'll do these points here, and then that'll pretty much be us for this market. Okay, so if you're just looking at me plotting this, you're sort of thinking, what is he taking into account? You know, what would you take into account when you're plotting this? For me, it's going to be this very strong spike right here. Now that's giving me the clue. If this will actually mark up, it'll be a lot easier. This spike right here, it's giving me the clue. And then I could say, okay, I'll bring it down ever so slightly to incorporate this spike down also. It's incorporating a lot of the price action here, but what I'm seeing is really this sort of candle here. It's sort of cutting through it, and it's a bit of a doji candle. So I'm just going to bring it down ever so slightly. So then the market's opened on this level, tried to spike up, and close back down once again. And really, although we've spiked up a few times here, I'd also say that the level ends here. So the close, the open. If I spike up here, sure, spike up here, but the market is holding within this level. We spike up here, we then press up, we try to hold this level, and we start to fail. Okay, so that's how I'm looking at support and resistance as I'm plotting it. Now what you can see is sometimes you get relatively close together zones, and if that is the case, and if you don't want to have all these zones, you can just focus on the key levels. So you could just focus on the major swings basically. So you know, we've got significant tests. So you just have this one. You wouldn't really want to look at potentially this one because you've just had a minor swing, and you definitely have this one because it's a fairly strong swing. And you've had 1, 2, 3 tests, you definitely have this one. But as we start to get down into these levels, potentially you'd only have this one here and then this one here. You wouldn't include the zone down below. It's all down to personal preference, how sort of in-depth you want to get and how many trading zones you want to have basically. For me, I tend to focus on the key levels, but I'll also mark in the slightly more minor levels. And then what I'll do is I'll usually only trade off of the key levels. And if I am going to trade off the more minor ones, I'll be a lot more cautious in my approach, and I'll more sort of use them as if I'm in a trade and I'm coming up to what I consider a more minor support and resistance level. I just want to be a little bit cautious, potentially get my stop to break even, potentially come out of the trade if I'm already in profit, etc. Now what we can then do is we can drop down onto the 4 hour. A little bit bigger, and we can just sort of start to perfect and adjust the support and resistance levels. So what you can see is this upper band here of this zone. You've got 1, 2, 3 spikes here, almost at exactly the same level. So really, we want to include that. So we're just going to adjust it ever so slightly to take into account that price action. If we just sort of look around, we can just see, are we missing anything? Potentially this level here, you know, you can see all the price action here. You just want to bring it up to incorporate those levels where the market held before we then sold off. It looks pretty good here now because we've got the swing. We just sort of work our way up, and we just say, okay, this level here, we've got this one here looks pretty good, but this one down below, looking at this price action, doesn't really look ideal to me because look at all this price action down here. So we just take it, we just adjust it, and we start to think, okay, what makes sense with this level? And I'd say probably down to this level. Then we're taking into account all of this price action. Market breaks up, comes down, it tests all of this as support, presses up, tests as support before we then get the breakdown. And what the 4 hour is doing is it's just letting you sort of tidy things up a little bit. You can maybe spot if you've got any zones that aren't sitting quite right. Okay guys, so that's everything for the support and resistance video. The main thing to do is, you know, just get some practice. It's all about growing confidence in your levels. It's all about making sure you are happy to trade off of your support and resistance areas. You know, we're potentially now creating a swing here. If you're just, you know, moving forward, you potentially look to mark this into a support and resistance level. Also, if there's no price action, you know, this is a very clean level, you can come left and you can say, okay, what about all this? 1 and 2 swings. Do I want a level here? If you do, you just start to mark it up, then drop down onto the 4 hour, see if it makes sense. Just adjust it ever so slightly until you get the levels exactly as you want. And then what you'll find is the more you do it, the faster you can do it. You know, when I'm plotting support and resistance now, it used to take me, I don't even know, sometimes it would take me hours because I would do a chart and then I would start to overthink it, and I'd have to delete everything and start again. And I'd maybe be focusing in on a level and I'd spend sort of 2-3 minutes on that one level, moving this area up and then down and then thinking, I don't really know where to put this. If you're doing that, you're just overthinking it. You should be able to sort of go through it quite quickly. The more practice you get, that is going to come. Now it sort of takes me maybe 10 to 15 minutes on a chart to mark it up for the month ahead, and then I'm happy with the levels and I'm happy to trade off of them for the month. Okay guys, that's everything for this video.